In this video, I'll discuss Q1 FY26 result and Concall of HDFC AMC. So, we all know what HDFC AMC does. They are an asset management company. They manage mutual fund, ETFs. So that is the thing. And if I talk about their AUM, their 65% AUM comes from their equity mutual fund, and then 20% AUM comes from the debt mutual fund, and then another 10% AUM comes from the liquid mutual fund. So that is the introduction, and let's talk about the result in Q1 FY26. So in terms of their AUM, they grew their AUM by 21% in this quarter. Like in the last quarter, the AUM growth was 24%, and if we look at their past also, in the Q2, Q3, they were growing their AUM by 35-40%, but the AUM growth came down because of like what happened in the market in the last few quarters. So that is the point. Every capital market company is affected by the fall in market. So that is the point. That is why their AUM also grew by 21%, which is pretty low at which rate they were growing a few quarters back. So that is the point. In terms of their inflow, in this quarter, equity mutual fund get an inflow of 91,000 crore, whereas in the last year, when all the things were right in the market, like market was giving wonderful returns, then the net inflow was 1,28,000 in Q1 FY25, whereas in this quarter the net inflow is at 91,000 crore. So there is a good kind of fall in terms of net inflow in equity mutual fund. But if we look at the debt and liquid mutual fund, then the inflow have doubled in a year. Last year in Q1 FY25, the net inflow was 61,000 crore, and this quarter the net inflow was 1,35,000 crore. So more or less more than doubled in a year. So in terms of debt and liquid fund, there is a good growth. But if we look at the expense ratios, the main income comes from what? Comes from equity mutual fund. So we have to track equity mutual fund in a very close manner. But yeah, that is a market dynamics, that sometime market will grow, market will fall, and with that also the behavior of people changes. So that is the thing. In terms of SIP flow, that increased year on year to from 21,000 crore to 27,000 crore. So in terms of SIP inflow, there is a good kind of growth, 28% growth year on year. So yeah, in terms of SIP, because it is a like more like like a plan that you are doing SIP every month. That is why that number held up. But in terms of the lump sum and all, that is why the inflow in equity mutual fund was dropped by like 30-35% in this quarter year on year. So that is the point. In terms of the revenue growth, they grew their revenue by 25% in this quarter. But if we look at their past, because we have to keep tracking the company, because market always looks to that company who are growing their sales at a very high pace and also increasing their sales growth quarter after quarter. But if the sales growth is coming down quarter after quarter, then market do not like those kind of stock. So that is why we have to track the past record and the future also. But as of now, the revenue growth is at 25% in Q1 FY26. If we look at their past, where the growth is coming from, like in Q3 FY24, the growth was at 40%. So in just 2 quarters, the pace of revenue growth came down from 40% to 25%. So yeah, that is the point. Before that, if we look at their last 1 and 2 years, they were increasing their revenue growth quarter after quarter. Like in Q3 FY24, the revenue growth was at around 20%, and in the next 1 year they moved their growth of revenue to 40%. So that is what I am trying to say, that they are growing their revenue and also growing their revenue growth. So market look at those company who are doing this. But now, as of now, for last 2 quarters, what they are doing, they are like the revenue growth is decreasing quarter after quarter. In the last quarter, the revenue growth was 29%, 30%. Okay, in this quarter it is at 25%. So that is where the problem is, that the revenue growth is not going upward but in the negative direction, downward direction. So that is the point we have to look at in the future. But if we look at other companies also, because there is still other company, other asset management company who have to release their results. But if we look at the last quarter, HDFC AMC was the highest paced company in terms of the revenue growth. So I think in this quarter also that highest paced thing will remain with them also. But again, the thing is that their revenue growth is not increasing, it is decreasing. In terms of the EBITDA margin, from the beginning they are doing a EBITDA margin of kind of over 70%, which is now at around 78 to 81% in last few quarters. So yeah, EBITDA margin is absolutely flat for last few quarters, which is a good thing for a company. In terms of the PAT growth, that grew by 24%, and in this quarter they also missed the in the last quarter also they missed, last quarter also they missed the operating leverage. In this quarter also there is no operating leverage because revenue is growing at 25% and PAT is growing at 24%, and there is hardly any kind of operating leverage there. So that is the point. But another thing is that the PAT growth is also like slightly coming down in last few, if we compare it to last few quarters of like Q3, Q2. So that is the point with PAT growth also, that it is not growing at a high pace. So that is the thing. In terms of the PAT margin also, that is also flat. If we look at their past, they are doing a PAT margin of 75 to 80% kind of. Okay, in terms of the margin, they are doing well. They are holding on to their margins. See one thing, we do not have, we should not see the what is their PAT margin. We have to see where the PAT margin is going. Okay, the thing is that 77% PAT margin, you can feel it is a very good margin. But again, the thing is that where the PAT margin is going, is it going from 77 to 75? Is it going from 77 to 70? Or it is going from 77 to 80? That is what matters. The number itself do not make any sense in stock market. Okay, but the direction makes sense in the stock market. So in terms of the direction, the PAT margin is stable. So nothing to say about it. It is good. They are holding on their margins. So that is the point with HDFC AMC. If I talk about the whole company, so that thing is what that I discussed in the part of revenue, that the revenue growth is coming down quarter after quarter. Okay, and market always reward those kind of stock those kind of company who are growing their revenue growth quarter after quarter, like what HDFC AMC was doing 2 quarters back. Like in Q4 FY24, the revenue growth was at 20%. In Q4 FY20, in Q3 FY25, the revenue growth was at 40%. Okay, and market loves this kind of companies. Market do not love this kind of company who are like was what HDFC AMC's growth was in Q3 FY25. It was at 40%, but now it is at 25%, which is a decrease, which is a steep decrease in terms of the revenue growth. Market do not like this kind of stocks. But again, the another point of view to look at it, like in this AMC segment, in this AMC industry, HDFC AMC is the highest paced engine if we compare it to Nippon, if we compare it to UTI. So that is another point to look at. So it is completely subject, it is completely person to person who see the industry from what level. So that is what I want to say. But in terms of the valuation, if I compare it to Nippon also, 45x kind of P is not a very expensive P. So that is the thing. I am not giving any kind of buy or sell recommendation, and if you look at my language also, there is no buy and sell recommendation I gave in this video. So yeah, that is the point. In terms of the valuations, I think that is in a fairly valued position. But again, if you ask me, I would not love to make any kind of position in this kind of stocks whose growth rate is coming down quarter after quarter, because there is many companies in the finance segment. If you look at AMC, if you look at the brokerage, and brokerage is not doing well, but again the capital market, in the capital market segment there is many company, there is NBFC, there is bank. So in finance segment there is many companies. So why I would like to invest my money where the pace of sales growth is coming down? So that is the point I want to share with you. So that is the point. So I think there is nothing to say more about this company. So that's it for the video. Thanks for watching.